Hello, fellow traders. 'Tis I, the rumpled one. It's Friday, July the 19th, the year 2019. Let's talk trading weekly wrap up. Well, this week, I guess maybe the theme was patience. And it's kind of funny how when you start getting into something, a particular subject, how you start seeing a bunch of things come to you that help you with your studies or help you with your understanding. I received an email today and it was talking about, let's see, what's it? Things you don't want to have regrets. And they talked about patience, and it says, letting impatience dominate your decisions and actions. Patience is not about waiting, it's the ability to keep a good attitude while working hard for what you believe in. I think that might apply to trading. Patience. It's easy to get mad if you see something where it didn't quite fit your criteria, but had you jumped in, you would have made a lot of money. Funny thing is those are the ones we remember. The ones we don't think about are all the times where we avoided that huge, portfolio crippling loss because we exercised patience. And I guess that comes with time, maturity, something. But of course, so long as you have your risk management in place, your money management in place, you can take that trade with the confidence that your risk is all you're going to lose as the worst case scenario. Of course, there are black swan events where price moves 500 pips in the blink of the eye. There's nothing you can do about that. So, weekly wrap up. Okay, if you're just now tuning in, the open gap filled. We're 13 pips off that weekly low. And you can see here, if you look, we're getting ready. We exited that wick zone. We're almost here. In this candle's wick zone, you see we went through that candle's wick zone. So just so you know, these wick zones, you don't only have to apply them to the daily. So we're looking at the weekly. They work in a lot of different time frames. Okay, once again, there's that previous day's midpoint right there. Price opened below it, went above, but couldn't then cross below, and there was more downside. Look, 6 days in a row. I say it's about time to start thinking buzzard reversal. Because you see here, we had 1, 2, 3, 4, 5, 6 ups in a row. We got the buzzard. Now we got 6 downs. And here, 1, 2, 3, 4, 5 down. So I would say buzzard reversal is on the near horizon. But remember, fellow traders, these videos are for educational purposes only. Your results may differ from mine. Forex trading is extremely risky, as any investing is extremely risky. So always seek the guidance of an accredited financial professional. That makes me laugh every time. Those guys, they're no better than the rookies. But of course, they want you to believe otherwise. So opening range of the week, you see here, went in once, came out, went in a second time, came out. This opening range is definitely proving to be a profitable trade. But if you think about it, the weekly range is usually bigger than the daily range, right? So we have a first day So that week's range is going to be bigger than the first day. The only way that's possible is if price either goes above that first day's high, below that first day's low, or a combination of both. Otherwise, the weekly range will be the opening range. And I'm sure that's rarely the case. So once again, simple trade just based on a couple horizontal lines. And you can see we went to that below the opening day for June, but popped back above it. And we are within the opening range of June. He had 3 ball put in yesterday. You see there was a nice move to the upside, only to have it retrace. And for those of you paying attention, at daily inside bar, you see here that the low was 121.14. There was opportunity to take advantage of that. Right now, if you're riding that trade, you're 23 pips to the good. Here, once again, we crossed through that upper wick zone. Didn't exit the lower wick zone. The range only 46. Look at this. What an anemic day. No pair over 100. And even the new beast is 74. The pound yen 47. What is going on with the markets? I mean, the volatility is just not there. So once again, you tighten your stops, you reduce your TP, and you just take those 5 and 10 pip gains. Here, monthly H1 lowest open just happened right here, the last hour. See, dipped in, came up above. Oh, you're up about 3 pips. I hope I have enough time. I want to show you a trade, and somebody's going to call the Harry hindsight, but it was a nice one. We had the open. We had the pivot point. This was a missed pivot. The current pivot was here, which was in the buy zone, so you didn't really have much of a bias. If you took that long or that short, you got stopped out. Here's a long, and it went and it hit that missed pivot. So once again, there's not that many missed pivots, and it took it out. Came right back through the open, and you can see here just kind of chop. So scratch trades are a pip or two at best. Rat zone, 46 pips. Really not much of a rat zone per se, but you see when you hit that high, it opened up. You could do the rat reversal trade. It paid off right here. This was just a turn trade, and you would have jumped in. Okay, once again, the pivot was taken out. And you can see we went through the weekly S2. We're right around it. Weekly S3 is down here. But since this is Friday, chances are we won't be hitting that. So we took out that missed pivot from yesterday. So now we just have the one left. And the day is the 19th. So we're going to have 9 trading days left in the month. Price action, 3 ball at the top. You can see here, it wasn't really making new highs. Just go ahead, take that wick zone trade here, paid off, or pro trade at the line. 1 ball at the bottom, looking to go long at the double O, unless the price starts here and then reverses. Trading with the H1 candle color. Once again, wick zones, in and out, in and out, in and out, in and out. We're in it right now. You can see it's a pretty substantial zone, 20 pips, which is about right if you think about it for the rats. usually, that's why if you get within that rat zone, 20 pips off the current daily high or low, you usually can make money. Simple horizontal lines, just take the cross, nothing esoteric. You can see here at the tick level, we're just oscillating about 3-4 pip range, nothing to write home about. On the Einstein, we had a trigger, and once again, in this environment where there's not much range, take 10% or so of the range. Think about it. The range is 46, adding the high. Actually, no. Yeah. High minus close, close minus low. That's the range, 46. So 4.6 pips would be 10% of the range. So you get somewhere near there and it starts to stop. Just take the pips. That's just one way of taking it. Now, I mentioned there was a really interesting trade here, and let me go and switch to dollar Canadian. Now, let's scrunch the chart so you can get an idea where dollar Canadian is. So you can see here, if you look back, you see all those wicks. These were wicks going on the upside. So you see right here, we came above that wick zone on the weekly. Now let's drop to the daily, and you see what happened? Put in a yearly low right there, okay? Yearly low, and then it reversed like a banshee. Let's switch over to the hour chart, and you can see it right here. It triggered a whole low trade and this nice movement up above. But then you see how we came short? I want you to see something, traders, how you can analyze this. Okay, you see right here, this was a holo trade 2 days ago. This was a holo trade 1 day ago. This was a holo trade today. You see, these levels are pretty much within just a couple of pips of each other. So you see that new high, price came down, price closed below that high, closed slightly below this high, failed to make a new high and dropped. So a holo trade there paid off handsomely. But this is how you analyze the charts. This is how you can see these setups. This was a thing of beauty. You see right here where price rejected here, here. And see, we're not talking about support resistance. That's conceptual. We're not talking about supply demand. That's conceptual. What we're talking about here is just looking at the wicks. This is just the way the candles. It came down here and then went back up. Okay, it came down here, went back up. This is not rocket science. This is just plain price action. Price making a new higher low and price reversing off of that higher low. It happens every day. That's the beauty of it. Doesn't matter if the markets are volatile or if they're basically stagnant, non-volatile like today. And the day before that, not much of a range. So in the case of dollar Canadian, it is a nice range. But for the other pairs, the same thing holds true. Just remember that. So, fellow traders, thanks for hanging out with me this week. Hopefully you'll come back. I'll see you next week. And so just remember about patience. And also, always remember, never forget, It's not what you trade, it's how you trade it. So go out there, have a great, safe weekend, and come back next week and drain the banks.